this Fed situation is just getting like weird. And for a while now, there's obviously been growing tension between Trump and the Federal Reserve, specifically Jerome Powell. And recently that tension seems to have kind of come to a head. Powell released like a strange, like hostage style video early Monday morning, discussing the investigation into the Fed, why he thinks it's an attack against him. And all at the same time, Trump is trying to replace him pretty clearly so interest rates can be lowered and he can kind of likely ramp money printing back up to keep stimulating the economy. And whether that actually happens or not, the situation itself is just weird. And what makes the timing of this really interesting for me is that while this has all been happening and over the past few weeks, I've personally been going on a pretty deep research path into digital assets and specifically Bitcoin. So I just want to say, like, why am I even talking about crypto? Because I've been skeptical of crypto for a long time. And honestly, I hadn't studied it myself. I hadn't looked into it myself. I trusted other analysts, other commentators, other big finance names who were also skeptical. I felt safe in my in my doubt of it. Crypto for a while felt kind of chaotic, very speculative, and pretty like unserious. You know, there's all these like meme coins you keep hearing about where they pump up and then lose all their money because it gets rug pulled. But over the past few months, I changed. You know, I looked into it myself instead of just inheriting opinions and just kind of parroting whatever I heard. I wanted to understand what the actual like value proposition of it was and what it's trying to solve and kind of where it fits into the future of finance. And so as a result of that, I've actually ended up allocating about 10% of my portfolio into Bitcoin. And I set up some monthly dollar cost averaging alongside my normal 401k and my Roth IRA contributions. Always going to be doing those. But let me explain why and why I think it matters in the context of what's going on in the Fed and what you can take for this and your investment portfolio. So 2 things before we really dive in here. This is not turning into a crypto channel. I'm not a coiner. I'm not a maximalist. And I don't want to be making constant like end of the world Armageddon snake oil videos just to farm views. That's not me. And that's honestly one of my biggest turnoffs with getting with watching crypto content anyway. So that's not what this is. And secondly, as always, I'm not a financial advisor. This is not personalized financial advice. Just walking through the research that I've been doing and how I'm thinking about my portfolio and how I can best position myself for the future. So what changed my mind? Well, I had some extended time off over the holidays, and instead of just scrolling and, you know, watching TikTok content and gaming, I decided to actually kind of dig in and really research cryptocurrencies. And I went looking for the most commonly read books that I could find, you know, kind of the standard like brochure type books that I could read to understand crypto. Not hype, not threads, not Reddit threads, not Twitter arguments, but like long form serious arguments. And I landed on the Bitcoin Standard, which is the main book that I've seen mentioned by a lot of people. And I agree with a lot of the book. A lot of it really made sense. And there was 3 ideas in particular that stuck with me and ultimately kind of led me towards moving a portion of my portfolio into Bitcoin and start DCAing. So I want to briefly walk through those super fast and then tie them back into what's happening with the Fed this week. So governments have historically followed very consistent money patterns. It's kind of one of the main early themes in the book. When you look throughout history, like at the Byzantines, at the Romans, at the French, at the British, different eras, different technologies, but the same thing happened. Money became easier to create. They started coin clipping, which is in small amounts decreasing the actual value of gold behind the currency. You know, it would go from an ounce to 3/4 of an ounce to half an ounce and just continually devalue the currency. Debt became easier to justify at a government level, and short-term stability was consistently prioritized over long-term economic soundness. And that doesn't mean like collapse is imminent or anything like that, but it does mean that monetary systems over time have kind of drifted into the same rabbit hole, I guess. The second reason was fiat systems do incentivize debt over savings. Like if you really think about it, this was kind of the main thing that I really realized that it made a lot of sense. Modern fiat systems are fully controlled by governments and the financial institutions inside of them, and they naturally reward debt over saving money because the purchasing power is consistently eroding. We've seen it happen at a hyper scale in the past 5 or 6 years or so, and savers are silently being taxed through inflation, and governments and corporations are incentivized to essentially continue borrowing. And what it leads to is what's been the talk of the town, especially if you're on finance, YouTube and TikTok, is asset bubbles, financial engineering. That's like, keeping the stock market and the economy propped up with this AI bubble, and people being forced into pretty massive risk just to try to make extra wealth. And Bitcoin's fixed supply is positioned as a hard opposite against those incentives. And that to me makes a lot of sense. Lastly, Bitcoin is as commonly heard is the digital gold with, better prospects or better portability behind it. And this is kind of the final idea that really clicked for me. Bitcoin isn't really like competing with these banks like Visa or like Apple Pay. It's competing mostly right now with gold as like a store of value. And I do think it has some advantages over gold. It is obviously easier to transfer. It's easier to cut up into slices, right? Like if I go to the Walmart, the common thing that you heard, which makes sense, is you're not going to sit at the Walmart cashier and shave off certain grams of gold to pay for something, but you can theoretically in the future just tap your phone to the cash register and pay with Bitcoin. That to me makes sense. It's also impossible to debase it, and there's permanently only 21 million coins. We don't really technically know how much gold is actually like below the Earth's crust, and they could just keep finding more and potentially devalue gold. So once I viewed Bitcoin through these kind of reasonable arguments in my head, I actually thought that it made a lot of sense and that it made sense to allocate a portion of my portfolio into it, which I did. So how does this tie into the Fed situation? Listen, I am not claiming whatsoever that Bitcoin is going to like replace the dollar. I don't think fiat is dead. And I'm definitely not claiming that I know how everything is going to play out here moving forward. But it is very interesting to me that as trust and like long-term monetary discipline continues to get shakier and shakier, it feels like every day, whether it's, political pressure, stimulus cycles, or like rate manipulation, more people are starting to look for alternatives, and we're seeing that in the volume trading of gold, silver, and cryptocurrencies. If leadership at the Fed does change, this is a completely an assumption, but I think we can expect to move towards more aggressive money printing and spending and justifying more debt because interest rates are down. I think it's reasonable to expect that. We don't know for sure, but in that case, to me, Bitcoin is going to win. Maybe not forever, but in that cycle, at least it'll win. And it just means that the conversation is going to grow. More things are going to happen. Bitcoin is going to get more of a hype cycle. And I'm personally tired of missing out on that growth. So my actual strategy, like I've kind of lightly touched on, is I didn't sell everything and dump it into Bitcoin. Again, I'm not a to the moon guy. Okay. I carved out a small controlled portion of my investments, treated it as a long-term, basically an asymmetric bet, and started dollar cost averaging. If it fails, my portfolio survives. I still have 90% of my assets in between cash and ETFs. But if it succeeds, I participate and I get to catch all that upside. And being in my mid-20s, that feels super reasonable to me. And I'm very interested to see where the technology goes, because I do believe there is a Doctor Strange multiverse universe out there where Bitcoin is like an actual like reserve currency and it gets mass adoption. And I don't want to fall behind in that scenario, but I also don't want to fall behind in the scenario where it finally just gets regulated to all hell, goes to zero, and we're just in the normal USD system. That's kind of leads me into my closing thoughts. Basically, is I don't know how likely any of all these scenarios are. I don't know if Bitcoin becomes the global, reserve currency like gold, or it's just a historical kind of experiment that we tried and doesn't work. But I do know this. I do understand
why Bitcoin is a thing, what it's trying to solve, and why people have been taking it seriously now for like 15 years. And for the first time, I just didn't want to sit on the sidelines anymore. I was kind of tired of it. Bitcoin's been very stagnant for about a year or so, and it felt like the right time to start jumping in before it goes either up in volatility or way down, where I can keep buying if it goes down and maybe catch some upside when it does bounce back up inevitably. So this isn't a bet against the dollar. It's not a bet against traditional investing. It's just kind of a bet on a different monetary idea. And as I'm seeing the claims of the coiners kind of start coming to fruition, I felt like it made sense to try to catch some upside. So hope this makes sense. Keep watching on the news. You just don't know what's going to happen. And even though you don't want to be trading and making rash decisions, it's helpful to know what's going on with your portfolio. So as always, thanks for watching. I hope this was insightful.